What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a strong bounce across the indices as we started to close some of those weekly gaps. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so in SPY we were up 3.18% today, and we did gap up over that resistance zone at 380, which was the critical resistance, and we did close at the high of the day, fully closing the weekly gap that was right around 390. So now looking at this chart, there are a lot of gaps to the upside and the downside, and we are sitting right at some very critical resistance, and we're also getting into very strong resistance where the bears will be waiting, which is right up here at this gap fill right around 401 and the 50 EMA. So remember, we are still in a bear market and we're still in a bear trend, so every bounce has to be viewed through the lens of a bear, which means it's likely going to be a lower high before the next lower low. So when we look at the possibility of where the next lower high is going to be, it is going to be somewhere around this zone between 390 and our 20 simple moving average is now right around 394. And if we break the 20 simple moving average, then you'll be looking for the gap fill at 401, which is also where our 50 EMA is. Now keep in mind, there are bears at all of these levels, and there were bears at 380, which is likely why you did see that short squeeze, very impulsive rally today. But just because bears are getting short squeezed does not mean that the bear market is over. You are always going to see these counter trend bear market relief rallies during every bear market, and you still need to be very cautious of more downside. So the only way we are getting bullish that the bear trend is likely over is if on this daily chart we start to put in higher highs and higher lows, and there is a lot of price action confirmation that we need before we see that. If we get rejected from any of this resistance and come down and put in a higher low and then bounce all the way back up to take out the previous high right around 418, then it will look like the bulls are back and they're starting to scare away the bears. But right now we don't see that, so we can't just assume it's going to happen, and there's still the possibility this is going to be a lower high before the next lower low, which could easily take us down to SPY 350 and possibly even lower. So you have two critical scenarios you need to pay attention to, and I would let price action do all of the talking. So right now on SPY, while we are above 380, the bulls are in control in the short term, and it's going to take the bears breaking SPY all the way back down below this gap fill right around 379.5 and then breaking that support at 370. Now as a bull, if you're still taking long trades, you can up your risk level from 370 up to 380 because 380 is now going to be your critical support you need to be watching. Now for bears, they're getting into some great risk reward setups for short trades right around the zone at 390 and the 20 simple moving average at 394. And without a doubt, in a bear market with price action coming into the 20 simple moving average, there will be bears trying to short this market. So for that reason, if price action starts breaking above the 20 simple moving average, that could lead to a short squeeze, which should easily fill the gap above at 401. So if price action starts breaking above about 394, I would expect to see price action becoming more impulsive as bears get short squeezed, and then you see that price action quickly going to fill the gap. And then I would expect to see more bears stepping in right around 401 to 403. And of course, if we break above that, the bulls will likely short squeeze the bears yet again. So while this is a bear market, that doesn't mean the market can't go higher. And eventually this market will put in a bottom, but we'll need to see the price action confirming the bottom is in with those higher highs and higher lows. So right now we can't say this is a higher high or a higher low, so we still need to watch this very critical resistance above. So bears use this critical resistance at 390 and 394, and bulls you need to be using critical support down here at 380. If at any point we break below 380, look for a retest and the gap close at 370. And if we break 370, we are very likely going down to that price target at 350. And as you can tell from the Bollinger Bands, they are very expanded, which is going to allow for a lot of volatility in either direction. Remember, volatility works in both directions, so just because we have an elevated VIX doesn't guarantee the market has to go lower. So you will want to wait for any breakdown below support before you start getting bearish on this uptrend. So in the short term, this is an uptrend, but obviously in the longer term, this is still a downtrend in a bear market. So you need to be watching these levels and have a trading plan knowing exactly what you're going to do no matter where the price action goes from here. Remember, I always tell you price action is king and let the price action do all of the talking. On the NASDAQ 100 triple Qs, we were up 3.43%, and the triple Qs did also gap over that resistance at 287 and also closed at the high of the day, closing just above the 20 simple moving average, which will be resistance around 294. So as you can tell, the triple Qs are a lot closer to critical resistance than we saw on SPY, closing right at this resistance zone at 294 and the next gap close is just above at 299, which is also our resistance trend line. So without a doubt, if the bulls can get a close over 300, that will start squeezing out some of the bears, but there are still going to be bears waiting at the 50 EMA, which is currently right around 305. So while we're in a bear market, you better believe the bears are not just going to roll over and give up easily on this downtrend, so they will try to short at these resistance levels, which will put a lot of downward pressure on the price. Remember, it's a downtrend until it's not, so you need to see confirmation of the breakout of this resistance and then a cultivation of a higher low before the next higher high. And the higher high in the triple Qs will be a breakout above 315, which is the previous daily high. So as a bull to the downside, your critical support, that is your risk level, is now at 287, because if we break below 287, we're likely going to fill that gap right around 277, and below 277 we'll likely retest the low at 269, and if we break to 269, the next lower low in this bear market is down here at 258. So you need to be watching all of this support to the downside, and as long as price action is above this support, it is possible the bulls continue to push higher. So in order to get more bearish, we need to see the triple Qs breaking back down below 287, and then it will likely continue the bear trend to lower prices. In the Dow Jones DIA ETF, we were up 2.7%, and again the Dow Jones gapped up and closed at the high of the day and did close above that resistance at 311. So the Dow Jones is looking like it's heading back up to retest resistance at that 20 simple moving average, which is just below 318. If the bulls can close the Dow Jones above that 20 simple moving average, it should be a quick trip to close the gap at 323, and there will be a lot of bears in the Dow Jones waiting at that level because that is also the 50 EMA. So very strong resistance at 323 if we do get that break above 318, and to the downside, your critical support for the bulls will be down here just below 311. And below that, you're looking for the gap fills at 307, and then the next gap fill will be all the way down here right around 299. And if at any point we lose the previous low at 297, we could start to see the Dow Jones trending down towards 276. So keep in mind, all of these indices are still in bear trends, and they are coming into some very critical resistance. So there's no reason to just assume the bears are going to go down without a fight. Expect this to be a very volatile fight at these resistance zones, and that does mean we could see a lot of volatility going into next week. So watch these levels and know exactly what you're doing with your trade plan. On the Russell 2000 IWM ETF, we were up 3.1%, again gapping up and closing near the high of the day and closing right at that resistance at 175. So again, you are going to see bears fighting at these levels. If the bulls can push through 175, look for the full gap close right around 178, which is also going to be the 20 simple moving average. And on a break above the 20 simple moving average, you have strong resistance at 182 and that full gap close just above 183. And our resistance trend line right around 185. So there's a lot of resistance just above that the bears will show up at, and we are still in the bear trend in the IWM ETF. So to the downside, your critical support, which is your risk level for long trades, is still at 170. Below 170, you're looking for support right around 164, and below 164, the next leg lower is down here at 156. On the Arkk ETF, we were up just over 4% today, and we did get the second day in a row closing above 42. And it does look very close to testing resistance at 47, which is going to be a very strong resistance level for the Arkk ETF. On a break above 47, the next resistance is up there at 52. And if we start getting consecutive closes above the 50 EMA and definitely above 52, the Arkk ETF will start looking a lot more bullish. But you have to remember this ETF is still in a bear market and we are still below all the critical resistance. So it's still possible we get rejected from resistance and go make that next leg lower. To the downside, the critical support is now at 42. And on a break below 42, look for strong support right around 36. And below that, we should have no problem getting to the price target at 33.7. On the VIX, we were down 6.13%, and the VIX did close below all the moving averages. So we are starting to lose the bull trend in the VIX, but we are still forming higher lows. The next strong support on the VIX below 28 will be down here right around 24, and the support trend line right around 25. So the bulls need to get the VIX all the way back down below 24 to start looking more bullish. Remember, many times we've seen the VIX come down to these lows and then get another spike in volatility. So you can't completely rule out that the VIX is going to come down to support and still spike back above 30 yet again. Remember, these are bear markets and they're not something you want to call a bottom in. So we'll need confirmation with the VIX getting crushed all the way back down below 24 before we trust these rallies and start to assume the bulls are breaking the downtrend. On Bitcoin, we're currently up about 0.25%, with Bitcoin trading just above 21,000, and we are back over the 5 EMA for the second day in a row and still holding that support zone at 20,000. Critical support is at 20,000, and the break below the previous low just below 19,000 should send us to the next price target at 12,000, but there's still the possibility we see the support level holding up and get a counter trend rally all the way back up to 28,000, with resistance on the way there right around 24 to 25,000. So your critical line in the sand for support for the bulls is down here right around 20,000. But do keep in mind this is still a very strong bear trend that could still send Bitcoin lower. On NVIDIA stock, we were up over 5.5% today, and NVIDIA did hold that support at 161, and it's bouncing back up towards that resistance at the 20 simple moving average at 175. On a break above 175, look for the gap close right around 181, and above the gap close, we have strong resistance at the 50 EMA at 186. Above the previous high at 196, we'll likely see a bull trend in NVIDIA stock, but that's a long ways away, and we still do have the bear trend. So on a breakdown below 161, look for a retest of the low at 156 and that price target at 150. On Tesla stock, we were up over 4.5% today, and Tesla is continuing to bounce off of that support zone at $700, and the next likely resistance will be a retest of 775. On a breakout on Tesla above 775 will be a bullish breakout with the next strong resistance just above at 828. And on a breakdown below 700, that is going to be a bearish breakdown for a retest of the lows right around 636 to 620. And below 620, you're looking for the next leg lower at 571. But as long as Tesla is holding above 700, that is looking a lot more bullish. But we still need to see price action breaking out to a new high above 775. On Apple stock, we were up right around 2.5% today, and Apple did close back over the 20 simple moving average and is very close to fully closing the gap at 142.5, but also has a gap below that won't fill till we go back down to about 138.5. So we have a gap above and a gap below, and we are in a bear trend, so there is a possibility we close the gap to the upside and then get a pullback to fully close the gap to the downside. So look for resistance right around 142.5 and the resistance trend line at 144. And if we get the bullish breakout, you still have resistance at the 50 EMA at 147 and 150. If we get the pullback from this resistance zone right around 141 to 143, look for a pullback to close the gap at 138 and that support level right around 137. And on a break below 137, we'll likely retest the low at 130. And if we break below 130, we have the downside price target at 120. So keep in mind, while this does look like bullish price action, we are still in bear trends and we are still slamming into resistance without any bullish price action confirmation. On the financial sector, we were up 3.69% today, and the financial sector is finally getting a strong bounce after what looked like very bloody capitulation, bouncing off of that support zone right around 31 and almost fully closing the gap above at 32.5. We still have the bear trend and we still have two gaps to fill to the upside. So look for potential to get rejected at resistance at 33, and it will be a lot more bullish if we could start breaking back over the 50 EMA. On the industrial sector, we are up 3.5%, with the industrial sector also getting a strong bounce today, closing back over the 5 EMA, but we still do have those two gaps above. But we aren't looking bullish until we lose the bear trend and start closing back over this 50 EMA. The healthcare sector was up 1.66% today, closing back over the 20 simple moving average and the 50 EMA, which is also going to be right around our resistance trend line. From here, the healthcare sector could get a bullish breakout or get a rejection from resistance and come back down to test support. On the energy sector, we were up 1.32% today, but the energy sector still looks extremely bearish with that waterfall wave of selling and no meaningful bounces, with price action still below all the moving averages and developing a bear trend. Watch this support zone right around 70, because below that will likely make the next leg lower. But if we do bounce off this support, we could come back up to retest resistance right around 77. So jumping back over to the S&P 500, without a doubt, this is a counter trend relief rally and we are slamming into some very critical resistance. So while we are in a bear trend, you do want to be extra cautious of resistance levels, because the bears absolutely will show up and make a stand at those levels. So across the indices, even though we did get strong bounces, the bears are waiting just a little bit higher, and they could come down at any point and attack price action and try to send it lower. The bulls have the advantage while SPY is above 380, so use that as your critical support level. And if we start breaking below 380, get ready for the potential of that next leg lower, because while we're in a bear market, you need to get comfortable seeing lower highs and lower lows, and you should not be getting bullish until we see confirmation in the price action that that downtrend has reversed and we're going back into an uptrend. We're a long ways away from getting any confirmation that this downtrend is over. So buckle up and enjoy the ride, and make sure you have a plan no matter where price action goes from here. Let the price action guide you on where the market is going, and then trade accordingly. Also, don't forget that I do have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord, where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.